Understanding precious metal royalty and streaming companies. Precious metal royalty and streaming companies offer investors a unique and lower-risk way to gain exposure to the mining industry. These companies don't mine metals directly but instead finance mining projects in exchange for a portion of the future production or revenue. This innovative business model allows them to benefit from rising metal prices without the operational challenges that traditional mining companies face. In this video, we will explore the history of these companies, how they generate revenue, key players in the space, and how to value these companies, with a final focus on Sandstorm Gold as a growth-oriented option. 1. History of precious metal royalty and streaming companies. The royalty and streaming model started in the 1980s when Franco-Nevada Corporation pioneered the concept. This business was based on acquiring royalty interests in mining projects, providing capital to mining companies in exchange for a percentage of future revenues. Franco-Nevada's model proved to be highly profitable, especially as gold prices increased. In the early 2000s, the streaming model emerged with companies like Wheaton Precious Metals, formerly Silver Wheaton, which innovated by offering upfront payments for the right to purchase metals at fixed prices. This allowed them to lock in favorable pricing, providing more predictable cash flows. Over time, these companies grew by acquiring royalties and streams on large-scale projects, establishing a new way for investors to gain exposure to precious metals without directly managing mining operations. 2. How these companies generate revenue. Royalty and streaming companies generate revenue through several mechanisms that minimize operational risks and provide stable cash flows. Net Smelter Return (NSR) royalties. The royalty company receives a percentage of the revenue from the sale of metals after deducting refining costs. This model allows them to benefit directly from the mine's output. Gross Revenue Royalties (GR). In this type of agreement, the company receives a percentage of the mine's total revenue before any production costs are deducted, providing more predictable revenue. Streaming Agreements. These involve providing upfront capital to a mining company in exchange for the right to purchase a portion of the mine's future production at a fixed, often discounted price. This structure allows the streaming company to benefit from rising commodity prices while limiting costs. Exploration Upside. Royalty and streaming companies automatically benefit from exploration success. If the mine expands its production or discovers additional reserves, the royalty company's income increases without further capital investment. Project Financing. Some companies provide financing for early-stage exploration or mine development in exchange for royalties or streams. This gives them early exposure to potentially high-growth assets. Portfolio Management. Royalty and streaming companies frequently buy and sell royalty or streaming agreements to optimize their portfolios, focusing on high-quality, long-life assets. This active management approach enhances revenue generation. 3. Key players in the sector. Several prominent and emerging players dominate the precious metal royalty and streaming space. These companies vary in size and strategy, offering investors different risk-reward profiles. Franco-Nevada Corporation, FNV, the largest company in the sector. Franco-Nevada has a diverse portfolio of over 400 assets, including gold, silver, and other precious metals. Wheaton Precious Metals, WPM. A leader in the streaming model, Wheaton holds streaming agreements on gold, silver, and palladium mines. It is one of the largest companies in the sector, with a focus on high-quality assets. Royal Gold, RGLD. Royal Gold has a portfolio of over 180 properties and is known for generating stable cash flows from its royalty agreements. Osisko Gold Royalties, OR. Osisko focuses on gold royalties, with a significant portfolio centered in North America, including the Canadian Malartic Mine. Sandstorm Gold, SAND. A smaller but rapidly growing player, Sandstorm focuses on acquiring royalties and streams on early-stage exploration projects, positioning itself for future growth. Other key names include Metalla Royalty and Streaming, Triple Flag Precious Metals, and Elemental Altus Royalties, all of which have carved out niches within the royalty and streaming market. 4. How to value these companies. Valuing royalty and streaming companies involves assessing a combination of financial metrics and growth potential. Key considerations include revenue growth. These companies benefit from multiple streams of revenue without the operating costs of traditional mining. Their ability to grow revenue comes from acquiring new royalties and streams, benefiting from rising metal prices and expanding production at the mines they're invested in. Dividend yield. Many royalty and streaming companies pay consistent dividends because of their stable cash flow. This makes them attractive to income-seeking investors, adding another dimension to their valuation. Asset diversification. A key factor in valuation is the diversity of a company's portfolio. Companies with a wide range of royalties and streams across multiple geographies and mining operations tend to be valued more highly due to reduced risk. Commodity price leverage. These companies benefit from rising metal prices without significant exposure to operational cost inflation, giving them leverage to increases in gold, silver, and other precious metal prices. 5. A company with significant upside. Sandstorm Gold. Among the companies in the sector, Sandstorm Gold stands out as a company with significant upside potential. With a portfolio of over 200 royalties and streams, many of which are tied to early-stage projects, Sandstorm is positioned for substantial growth as these projects move into production. Its forward P/E ratio of 34 is lower than its trailing P/E ratio of 54, signaling expected earnings growth. Additionally, Sandstorm's strategy of focusing on exploration stage projects with significant upside potential differentiates it from larger, more established players like Franco-Nevada and Wheaton. This focus on growth, combined with its relatively smaller size, provides an opportunity for greater returns as its assets mature. Precious metal royalty and streaming companies offer a low-risk, stable way to gain exposure to the mining sector. Companies like Franco-Nevada, Wheaton Precious Metals, and Royal Gold provide reliable cash flows and dividends, while smaller companies like Sandstorm Gold offer growth potential. Understanding how these companies generate revenue and how to evaluate them can help investors make informed decisions in this lucrative and evolving sector.